Hey everyone, it's ready for 401k or Money Viking Bob with moneyvikings.com. We're going to take a look here at DraftKings and determine if this is the King's Gambit or his demise. Stay tuned, we'll talk about it next. All right, so let's look at DraftKings here. So I'm on a daily chart, logarithmic scaling. First thing I always like to look at is the sentiment of the market, sentiment of the investors, the traders, and just see what's going on. So that's where I'm referencing the RSI and the stochastic. I can see that there is this kind of dynamic resistance, which is fine. This happens in the sentiment. It's kind of following it on the uptrend. I like, stochastic is a quick and easy identifier of like buy sell signals, as long as you pair it up with the other indicators like your RSI, price movement, volume. Like these things will kind of help you make a good educated assessment of when to enter if you're doing trading or trying to find low points of a longer term play. So this is a great indicator. What we can see here is, so RSI is getting to this high point, right? Sentiment's hot. This is bullish. When we have this kink over in the stochastic, it could be an indication of, okay, don't enter at this point because there's a reversal occurring or something's going to happen. So you either want to hold, exit, whatever it may be. Now, we don't want to see this as a false signal though, because we can see in the past that stochastic does these crossovers, does these breaks, right? Rolls, comes back up. We see price kind of falling with it. This is just the natural ebb and flow of price. What is a good sign is that when back here we were on this bearish trend, this downtrend, this wedge, you can see that the stochastic and the RSI bearish, stochastic getting way low, right? We break up to the high. So when we start seeing the stochastic do these breakdowns that are just actually pullbacks. This is just a little pullback in price. This is a cooling off of technicals and go back up again. That's great. Then when it breaks down here, it doesn't break as low as it usually does. When it was on that downtrend, it doesn't break as low. And so we can see that it just gets to the bottom of the RSI channel before it goes back up again. And when it came up, it got kind of these same highs we've seen historically in the past. So this isn't even a bad thing. Before we see this cool off, this is in a way could be seen as a little bull flag right here. And then it does it again. So this break up here and curl down could very well be the same as what we're seeing here. We could see it just kind of curl down to the top of the RSI channel at this point, and then come back up again and just hit up to, hit the 100 range and it could hold. So this little down that we saw, this tells me probably maybe some shorting was occurring. Maybe somebody saw this as being the peak and they're getting out of it and wanted to retain profit. Nothing wrong with that. Next week we'll see what the market has to say, because as we know, the market this past week wasn't too hot. But we can see, okay, so now let's move up to price, right? Let's move to price action. We can see that we have this long drawn out support, right? There's long historic support. We have inside of this downtrend, because it breaks down confirmation on the support. Inside this downtrend, we do have kind of a marginal or partial kind of trend being respected here. Because we can see price gets around this line. We can see that we have 2 points of interest here. We have an intersection on a longer dynamic support. So could have relevance. Is very well could be what helped form the breakout. And I'd like to subscribe more to that, because I can see here this is a downwards wedge, right? So we have this resistance point, we have the support point on the downward momentum. Wedges are some of the most powerful formations. Okay, the price just wants to rip out of this tightening of the formation. It wants to blow out at top or bottom, depending on the direction of the wedge. And we can see that confirmation. All right, price breaks up. You know, it wants to get support. It finds it. We have lots of the moving averages that then become a support on this, and then it gets above the TWAP, and then it takes off. Okay. Now, if we dive into the Andrews pitchfork, right? Pitchfork formations. So we can see here that these are respected, right? We go from a high to a low to the high of this this kind of radical volatility, this trend, right? And we can see that we are getting respect. Let me go ahead and hide. We got two going on here, so let's hide one of them real quick. Let's do that. Okay, so we can see here that in this pitchfork, you can see where price actually is respecting the pitchfork, right? We're finding points where there's a lot of interest around here. This is the midpoint before you start getting the breakdown. So the pink line in this pitchfork that I have here, a way that you can imagine this is like a point of control when you're doing a volume profile. So if you're ever doing a volume profile, there's a point of control to where the buying and selling is going. You can kind of imagine it in that way. This is like the point of control. Price is gonna find this. If it finds this as a support, it's a power point for bullish. So it's gonna bounce back up and want to keep going. Breaks down below it, bear control. So it'll continue down more, right? So we can see there is this battle going on right here in this realm. But then finally, at some point, it does break above it and go. So this is where our next pitchfork comes into play. All right, so we're going to identify, oops, I need to put on the bands. There we go. So we can see here, all right, so we now have another respected formation on trend with a pitchfork. And we can see that it's just stayed in this bottom channel of it. It's now trying to make the transition up into this next kind of phase of it. And it's going to be now testing an even more extreme bullish kind of price action. So once it gets up to this point, we should see more. As you can see, we did get stopped out at a historical kind of resistance point right here. And that's what happened with price. Now, does this mean that price could get rejected off of this? This is the power point and the point of control, I guess. And we see price go back down to the bottom side of this channel, but still on the uptrend. Absolutely. We could absolutely see that. And there's, we could even draw, retracement off of this if we wanted to. Let's say this was the scenario. Let's say this was kind of the trajectory here, right? So hypothetical situation. Let's just taking things into consideration. If we're just looking at the price movement itself, this is what I would see as support points if price were to do downwards movement off of this. I would see 62.16, 61.94, so around our $62 mark, and then 61.16 or $61, and then identifying a low, if you want to get more precise, probably around like 57.75. All right. So this is the hypothetical. If this truly was the kind of resistance test point to maybe a retracement before trying to retest this, just glass ceiling in a way, could very possibly be a situation. Not saying it is. Just we got to take these things into consideration when we're charting this out. All right. Now let's look at a curveball. So here's a curveball. So is this possibly the trend? Because originally pulled pitchforks off of this volatile movement, high, low, high, within this high, low, high, or ABC of formation is where you can anchor your fork, right? Now, we have a low, high, low, so an ABC of a possible additional trend inside this, right? And we can pitchfork off this. And I can see, okay, we're getting some confirmations here. Not the best, not the greatest. So here's the big curveball. Is when I drop this out of logarithmic scaling and I go to linear, there is better confirmation. We can see the battle over that quote unquote point of control, right? We can see it in this zone, and we break up to the upper channel. We're finding resistance. It breaks through to now test the upper part of this fork as a support. So these are the variables that when you are charting, you're looking at technical analysis that you need to take into consideration, is that you've got to be dynamic and look at the additional things, the additional tools, the additional calculations to get a best assessment. Sometimes you got to go into a line chart. You got to switch between a candle and a line. So this could very well be now the formation that we want to look at based off of a linear chart. And if this is the case, and we come in, next week. So if I go a line off of this, our next candle is going to start right here, which this is confluence. We have a support line crossing over a pitchfork trend or pitchfork channel. There is confluence in technicals. So price could, if it opens right here and find it as support, and we see price moving, then that does validate this, and that does confirm this as being true. So, this isn't a really definitive answer on, okay, hey, I'm not going to sit here and try to hype it up and say, oh, to the moon, guys, to the moon, we're going, all in, throw your life savings in there. That's not what I'm saying. I'm not telling you this is collapsing. This is the stuff that we just need to be aware of when we're investing or trading, whatever it may be. Now, if I bring in the Bollinger Bands, I can see here that my moving average of my Bollinger Bands is actually the Hall moving average. So I like to refer them as the Bollinger Bands. This is the Hall 21, and price breaks down below it. Okay, so again, put an asterisk here and just say that this doesn't mean that price is going to continue to roll over and collapse. Sometimes, again, technical cool off, price may go sideways. We may see this, the Hall 21 curl over a little bit, right? We see instances here of the Hall curling over a little bit. Price gets underneath it, but boom, price rips out above it, finds it as support again, and on its merry way. This could very well be what's going on, right? Because we have breakout on a daily chart of a downwards wedge, very, very powerful formation. So now it has beat, it's made it above where we want to see it go. We want to see it start to make higher highs, higher lows, right? This is bullish. It's done this 1, 2, 3, and it got stopped out at its fourth test of confirmation on the bullish trend, right? So I'm going to watch this closely. What I'm seeing right now, it does look bullish. It does look, even though people like to refer this as overbought, oversold, right? I am looking at this more very bullish, very bearish, right? So RSI can sit up here for a while. It can sit up here high and cooking for a long time before it breaks back down. And so we could see it do what it's done, right? The sentiment could come back down in this upper channel, still bullish, and then come right back up again. It could curl down. It could make newer highs on the sentiment. That will force price up even more. The bands are broadening out. So typically when we see the broadening out, price is going to kind of make a little, and not want to say correction, but it's kind of a cool off period, right? It's going to be a little bit of a consolidation, a little bit of a pullback to these bands will reformulate and they'll tighten up. So, price moves down, the bands will tighten up on it and confirm it. Price could go sideways. So this is where I, want to maintain that we just kind of keep these, stop losses in your mind of where you want it to go, right? So I think it was It's probably looking around here, right? Or maybe even better yet, let's do let's do this. I'm a fan of 5%. I like to keep my margins tight. I know people do this differently, but I'm you know, I've said this before, being a good investor is about making profit. Being a great investor is about minimizing losses. So, you know, or great trader, I should say. So, you know, if I was staying to my creed here, right, and you know, 5%, I'd be looking for this to get around 61-ish. Let's just say 61, round number, where I would kind of look for it to go. Now, what this does, because we have these highs here, so I could look, and I know this keeps it really tight from where price closed, but this is, you know, also because I'm in the trade, right? So, you know, I'm going to watch this. Price is getting around to where this high was. It could find it as support. Ideally, again, I know I'm reiterating, being the broken record. If it finds some support here in this channel, but then we talk about going as low as 61. Let's change that. Oops, not 612. I would like for it to be 612. 61. All right. So we can see where this is. Okay. I can see that there is confirmation historically, like prices hovered around this point. This is also a psychological barrier, the whole dollar. So I would hope that this would be the lowest point that we get to. Other than that, I'm going to wait. I'm going to wait to enter any sort of trade on this. All right. So let's look at bigger picture. Okay. So if I go bigger picture, we're looking at a weekly chart here. I'm still using some of the original pitchforks, logarithmic scaling on the weekly. We can see it's respected. I can see that price on the weekly chart on this pitchfork. Let's get this out of here, actually. We can see it is respecting this on the weekly. And the guy kind of stopped out, but this is an inverted hammer. We have a hammer to inverted hammer, still powerful signals. You know, market's not necessarily agreeing with this price, or it could be shorting, right? Price is going to start the next week over here. This does then respect the pitchfork. And we could be continuing on. I think this is still going to see uptrend. I don't see this rolling over. So if we were looking on a weekly chart, you know, kind of like to do this sometimes. I'll go from the peak to the low, right, of this kind of breakout. So let's go right about there. Okay, if I go to this point. So bigger picture, it does change a little bit, right? Because I'm going from the lowest point. If this were to do a collapse, an actual breakdown, downtrend retracement, this is where I would be looking at. If I were to do just your typical, this was a bull run retracement, right? It shifts a little bit. I like to calculate this way on the reversal side because this stays true to my tighter margins, because I don't want to give up this much. I don't want to, you know, test the 618 or the 65 or the 50% principal. I want to do this on the reverse side, on bear trend. And this is just my little trick, is that I like to measure off of this like it's a bear trend, because typically on a bear trend, when it's downtrend, the retracements, actually your resistance, your resistance points are going to hit before the downtrend continues. So I like to actually treat it this way when it's on a bull trend, so I can actually tighten up my margins and still keep my profits good. So I would, again, if it's on a weekly scale, if I'm in trade, I'm not going to do this. I'll tell you right now, I'm more of I will do it on the daily. But for other people out there that want to do more of the investing, more long term, you can go on a weekly scale and pull these lines to the retracement to get, you know, a tighter kind of stop loss. So anyways, all right, everybody. So this is just kind of the quick overview, not so quick, of DraftKings, where it's going. I'm still bullish on it. This looks really good. You know, it is ripping out of a downwards wedge, so it's a reversal, and it's just kind of testing some limits now. So you just got to play it safe. Always hedge if you can. Do some puts where you need to, or, you know, yeah, just make sure you're hedging wisely. But anyways, that's it. Come check us out, moneyvikings.com. We got a lot of great content, and we will see you on the next one.